Asia's stock markets are on a roll, mirroring Wall Street's upbeat mood and gold's record-breaking surge. But here's where it gets controversial. This rally is happening despite, or perhaps because of, the ongoing trade tensions between the US and China. The trade war's impact on markets. While the trade war rages on, with President Trump declaring it openly, stock markets in Asia are showing resilience. The chip sector, in particular, is thriving, with a strong rally among US peers overnight. This optimism is further fueled by the robust earnings season on Wall Street, which has lifted investor sentiment. However, the trade frictions between Beijing and Washington are not going unnoticed. Safe haven assets like gold and the Japanese yen are gaining traction, while the dollar takes a hit. Gold, for instance, has reached an unprecedented high of $4,234.41 per ounce, reflecting investors' concerns. A global perspective. In Japan, the Nikkei index advanced by 0.8%, with chip and AI-related shares leading the way. Taiwanese and South Korean markets also saw significant gains, with both indices touching new lifetime highs. Australia's equity benchmark followed suit, adding 1.1% to its value. The story is similar in Hong Kong and mainland China, where shares initially wobbled but eventually rose despite the trade tensions. US stock futures, however, remained flat after the S&P 500 and Nasdaq's overnight gains. The AI factor. One key driver of this market rally is the optimism surrounding AI. With booming AI investment, companies like Dutch chip-making tool manufacturer ASML are reporting impressive third-quarter results. This narrative is stealing the spotlight from the trade war, at least for now. Calming signs? There are some glimmers of hope on the trade front. U.S. Treasury Secretary Scott Bessent suggested an extension of the current tariff reprieve is possible, and that a meeting between Trump and Chinese leader Xi Jinping is still on the cards for later this month. But, as Kyle Rodder from Capital.com notes, the brinkmanship hasn't dissipated yet. He adds, "It will only simmer down completely when both sides make significant concessions. Until then, markets will remain on edge." Oil's response. Trump's trade maneuvers have also had an impact on oil prices. Brent crude futures and U.S. West Texas Intermediate, WTI futures, both rose, lifting oil off 5-month lows. This is partly due to Trump's announcement that India will halt oil purchases from Russia, a move that could pressure China to do the same. So, while markets are rallying, the trade war's impact is still very much felt. What do you think? Are we seeing a temporary calm before the storm, or is this a sign of a more stable future? Feel free to share your thoughts in the comments.